Hello, everyone, and welcome to Financial Accounting. Today, we will look at unearned or deferred revenue and the effects of making adjustments to the unearned revenue account. Unearned or deferred revenue is a liability account that records the cash received in advance of performing services. Unearned revenue is not revenue. Don't get misled by the word revenue. The key here is that it is unearned, and unearned revenue is a liability. Let's see how it works. Since unearned revenue is a liability, it is reported on the balance sheet instead of the income statement. When a portion of revenue is earned, that partial amount is transferred from the unearned revenue account to the revenue earned account. This adjustment is usually made at the end of the period before preparing the financial statements. Let's look at an example. Alamo Incorporated is a consulting company. The balance in the unearned fees account before adjustment at the end of the year is $48,000. The balance of unearned fees at the end of the year is $15,600. We are required to determine the amount of adjustment. The amount of fees earned during the period equals the balance of unearned fees before adjustment less the balance of unearned fees after adjustment. We know that the balance in the unearned fees account before the adjustment at the end of the year is $48,000, and unearned fees at the end of the year are $15,600. By deducting $15,600 from $48,000, we determine the fees earned during the period amount to $32,400. An adjusting entry at the end of the year for unearned fees includes an increase to fees earned for $32,400 for the amount of fees earned, as well as a decrease in unearned fees for the same amount. In the next few slides, we will learn how to journalize and post this transaction. If you are not familiar with the process, I would recommend watching the video in the playlist, The Accounting Cycle, Capturing Economic Events. I am posting the link here and in the description box. Now, let's look at the adjusting entry that converts a liability to revenue. Adjusting entry is necessary when cash has been collected in advance of earning revenue. For example, cash is collected in advance when a magazine publishing company collects cash for a 1 or 2 year subscription. Other examples of transactions that require an adjusting entry to convert a liability to revenue are the sales of airline tickets or season tickets for a sports team. At the end of the accounting period, we need to record an adjusting entry to recognize the revenue earned during the period and to reduce the liability account. In our example, Alamo received $48,000 cash in advance. This transaction is recorded as a debit or an increase in cash and a credit or an increase in liabilities account called unearned fees. Remember that assets are increased by debit and liabilities are increased by credit. If you need a refresh on the rules of debit and credit, I'm posting the link to the video here and in the description box. The next step is to post this transaction to the ledger accounts. Unearned revenue is posted on the right or credit side of the unearned fees account. No revenue is posted at this point as it hasn't been earned yet. Not on the slide, but cash is posted on the debit or left side of the cash account. I have more examples in the video Deferrals. The link is posted here and in the description box. Let's look at the adjusting journal entry required on December 31st, to recognize the revenue earned during the month. On December 31st, Alama needs to debit or decrease the liability account unearned fees and credit or increase the fees earned account for $32,400, which is the amount that was earned during the month. Since not all revenue was earned, the balance stays in the unearned fees account. The next step is to post this adjusting entry to the ledger accounts. The unearned fees account is decreased or debited, and the earned fees account is increased or credited. I hope you found this video helpful. If you did, please make sure to subscribe, hit that like button, and ring the notification bell so you're notified when we release more videos like this. Thank you all so much for watching, and I hope to see you all again in the next video.